Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everybody, looking at SPY on the daily weekly time frame, and then I'm going to do a little correlation between SPY and oil because it is what gave a little bit of a heads up to me personally that the bears were going to be in control of SPY today. So looking at the daily time frame, we have a gap down, second gap down open in a row, and a week close. We closed just above that 10-day moving average. This price right here on SPY factors in some after hours, but we did close just above that 10-day moving average. So we'll be watching that level again tomorrow to see if the bulls can continue to maintain that. If they cannot, we'll be looking down at the low of 213.44. But the hourly RSI was oversold for the entirety of today. Actually, I'm going to show you the hourly to make things easier. First, let's look at the weekly. So we closed just above the 10-week moving average resistance. The S&P 500 did not. It rejected from that level. So that is worth noting. We have a tightening range between the middle Bollinger Band support of 212.19 and the 10-week moving average resistance of 215.73. I don't anticipate to see a break of this range this week, and I actually want to show it on the S&P 500 a bit more clearly. So there we are right in the middle, and I would say within the next week, next week we will likely see a break above or below the 10-week moving average resistance or the middle Bollinger Band. So definitely keeping an eye on those levels. Short-term bounce from the Fed. And if we lose that middle Bollinger Band, we're looking down at that low from that dump 2 weeks ago. And if we close above the 10-week moving average, we're looking at new all-time highs before the end of the year. So let's look at this correlation, then we'll look at SPY on the hourly. So here is where some red flags went off to me, and I will admit I was faked out by the bulls. So we had the initial pullback, and we found some support down at 214.42, rejected from exponential resistance, formed a higher low at 214.47, and then got some higher highs. So we knew the bulls were seeing a strong bounce once that higher low and then higher high formed, turned the 20-period moving average back into support. We missed breaking the high of the day by 2 pennies, so that's a bit of a double top. We consolidated healthily. The increase in red volume here, you have to attribute some of that as bulls buying the dip because you see the lower wick on that candlestick. And then we saw big time follow through. And here's where I was faked out. When we hit the new high of the day, I was aware this 100-period 5-minute resistance was there, but I certainly figured we would see some more continuation to the upside after that strength. So I was faked out there, but about 15, 20 minutes later, it became clear the correlation from oil was worth noting. So here's oil over here, and I want to look at the 5-minute charts. Let's first look. This first candlestick here is at 9:40 a.m. So over here, we've got 9:40 a.m. We've got red, green, green, red. Red, green, green, red. 3 big green on oil, 3 big green on SPY. Consolidation for 3 candlesticks. Consolidation a little bit different here, a few candlesticks, but not notable differences. And then we formed a double top at the high of the day when SPY broke the high of the day. So there was a short-term little bullish break on SPY when oil had not done so yet. And then we pulled back and consolidated. And then I see oil break out and continue running. So after watching this correlation be so exact on the 5-minute chart for, let's see how long it was, 30, 45, almost an hour of direct correlation, and then seeing oil running and SPY not following, that to me was a heads up. And I believe right here at 10:55, I said in the chat room, I had just signed off live, and I said, caution SPY bulls, correlation between oil and SPY favors bears in SPY. So then we see for the next 20 minutes, SPY pulls back and loses key 20-period support and heads back to the low of the day. And I just lost the oil. Let's pull it back up. And oil continues to the upside and hits higher highs. So the change of correlation and the fact that SPY bulls did not follow along after following almost tick for an hour definitely stood out and showed me weakness in the market. So it's always worth watching the oil and SPY correlation. That was a clue for that weakness. And after being faked out for the bulls, quick turnaround and knew to change my stance to be favoring the bears due to that fact. Let's look at the hourly time frame on SPY and why I think we are in for a short-term bounce, either after hours, pre-market, or early tomorrow morning. And it's the RSI. The RSI has been under 30 the entire day. This is the 2-day chart. So very rare for us to see the RSI under 30 on the hourly for the entire day, but it's even more rare to see it stay under 30 tomorrow as well. So that's why I think a short-term bounce is due. Look at the exponential resistances. This 4-period exponential hourly resistance has rejected the price for 2 days in a row. No candlestick has closed above it. I'm not going to count that little 1 share volume candlestick, but we've been rejecting from it, and that shows the strength of this downtrend, knocking the price down time and time again. And it will be clear once we get over those exponential resistances to be looking for a short-term bounce. We'll see if we get a bullish MACD cross. But as of right now, bears certainly in control. The question will just be, can they keep it up with the RSI oversold the entire day, as it would need to stay oversold to see weakness tomorrow. If it were, and we did see a gap down open, it would be a 3 gap down bullish reversal pattern on SPY. So I'd be keeping an eye out for that as well. So that's a whole lot of what was going on today, what to look for tomorrow. I appreciate you watching. Hope you have a wonderful night. Let's see what the debate brings and how it affects the markets.